Hello everyone, how's it going? In this video, we're going to be talking about BIONANO Genomics, trading under the ticker symbol BNGO. So BIONANO Genomics is a company that has gathered really a lot of glorious moments back in 2020 and 2021 due to the legitimacy and the recognition of its technology from the scientific community. And back then, this sudden, good news essentially saved BiOnano Genomics from being delisted from NASDAQ. Although, to be fair, delisting was also, possibly avoided with reverse splitting. Now, usually what happens afterwards is that once this huge spike happened, it's going to followed by, sharp declines or slow grinds to lower levels. And in this place, I think that it was rather significant as a decline. The explanation is also very straightforward in this case. The growth stock didn't really fit very well with the change of the conditions. So the financial conditions and the context surrounding which BNGO, along with other stocks in NASDAQ, was evolving in, it changed dramatically from 2021 and 2022 and onwards. A lot of worrisome events and also signals have spooked investors. For example, when a stock rose so fast, so quickly, it's only a matter of time before somebody will start asking themselves, well, is this whole thing warranted? Does it really deserve to go that high? And then they're gonna start unloading their position and then cash in whatever unrealized gains that they have accumulated so far in order to avoid some realized losses. And the other thing is that there's just less money circulating around. The money has been more absorbed by other options compared to this growth stocks or even the EV stocks back in early 2020. Basically, my point is, back then, people had a reason to pile in their cash in riskier areas. First of all, the interest rates were very low. And second of all, they saw this movement. So they wanted to pack in and to make sure that they don't lose money in extreme volatility situations. So for example, in March 2020, as the world economies began to shut down, people were afraid of financial stocks Armageddon or financial markets Armageddon. And in order to avoid this from happening, people kind of wanted to collectively believe in tech stocks, growth stocks, and more importantly, EV stocks. This period of time seems to be behind us, and right now the reality is BNGO didn't do better or worse than many other growth stocks, but it does have very robust scientific research results. And it does have a lot of potentials in the genomics area. The other reason is that people might sell the news. Once the good news are out, sometimes investors dump shares upon those good news because they want to have the additional liquidity to get out of a position. But in the meantime, I would say that BNGO has been getting more attraction from the scientific and medical fields. So the recent sales of the saphyr systems were done mainly in the United Kingdom to the National Health Service, NHS. With that being said, the British economy is currently going through, shall we say, delicate moments, with sterling going down. So this means that their capacity to pay for new equipments or their appetite for new products could also change. The other thing is that BNGO has also been expanding in Spain. So we can definitely expect a certain number of growth in the European markets that are becoming more open to BNGO. And that in itself is definitely a good news. With that being said, current issue with BNGO is that many of the markets in which it's operating in are being affected by external reasons. For example, Europe is very close from a war scene. It also has to deal with a complicated winter to come, which could become a new winter of discontent. Because a lot of those places require energy imports to function. And due to the war, they may have some difficulties in getting a steady supply at a reasonable cost. So, because of this, ultimately, governments may have to subsidize the additional cost the citizens are having in order to keep the popular favor. But by doing so, they're also going to increase their debt and reduce the capital available to be spent elsewhere. In other words, BIONANO genomics products. So, with that being said, beyond the fundamentals, this, in my opinion, is one of those typical companies from the heydays of 2020, 2021, that faded along with the interest that people have in those stocks. It is still a relatively small cap company with high risks and not always well understood, like what is their role and so on. Although I have to say it's slightly better than Palantir in this sense. So we know that, for example, like genomics is one of the sub-studies in the medical field in general. And from there, people can kind of get like, what is the purpose of a company like this, right? It took us a pretty long time, but at the end of the day, I think that those who have held Bngo for all these months, and I want to say all these years almost, are likely going to get rewarded by recovering some of their losses. I'm not sure if they can recover all the losses and even make a gain, but in my opinion, this current like price action is not the end, but something that's going to continue over the next few weeks. Okay, it might have like a pretty timid recovery compared to like usual takeoffs, but I think that it's going to do us some good. Other than that, the current price is, I think, decent for the short-term future, like I said, but there might be more dips upcoming if the real economy as a whole goes into recession or sinks in deeper into recession, regardless of what the statistics suggest. Now, I would say that for people who believe in BIONANO genomics, who believe in the genomics field, and who believe that, like, essentially this stock is going to make it through the recession, I would say that it's a good idea to start buying now. It's not a good idea to start putting in all the allocation that you have in this stock. Now, with that being said, I do believe that it could be one of the decent entry points because we now have a confirmation that, at least in terms of support, it's not going to test the support over the next few weeks. So putting in a portion of your allocation, if you're prepared to buy BIONANO genomics from a fundamental perspective, could be a good idea. With people who want to just make money on like the volatilities, I would say that those days are gone, and not just for stocks in general, but also for BIONANO genomics specifically, for the simple reason that maybe people have seen it already, so they understand that this kind of situation where, you know, the company went from a penny stock and then 10x, 20x, it's not going to happen to the same stock multiple times. At least this is what they're going to say. And because of this, you know, I do believe that it would be a good idea to look elsewhere if the goal is quick profits by day trading or swing trading. Exposure that I would be recommending should be somewhere around 1 to 3% of the portfolio, and I would expect a further 30 to 50% decline. At least I would be prepared for it, right? Simply because, again, the surrounding economy, the surrounding environment in which BIONANO genomics, just like every other stock, evolves in, is not at its best at the moment. I would say that you can save up a portion of your allocation for this scenario, and regardless of whether it happens, I believe that it's a good idea to dollar average in 5 to 10% at a time over a period of 6 months to 9 months. Now, given the current market environment, I believe that the equity market is in a vast phase of correction, especially when it comes to tech and growth type equities. The financial market has been living and breathing thanks to the continuous creation of new capital, with different waves of quantitative easings. which will have consequences on the price of assets as well as their yields. With the interest rates kept relatively low over the years and the increase of amount of capital in circulation, this will keep putting significant pressure on the profit that we can expect the investment products across the board. And this, by the way, is a reality that may shift in the years to come if the interest rate of core infrastructures within our globally financialized system increases. It's useful to remember that the market doesn't represent the real economy, and of course, the real economy doesn't always reflect in the stock performance, since the name of the game here is ultimately called supply and demand, which depends on a whole bunch of factors that go way beyond our own control. If we think about it, this is like saying, if your neighborhood house that is put up for sale is only allowing those who actually want to live inside to buy it, versus if you allow every single type of buyer with different intent or reasons to buy or to sell it. So obviously, there will be a significant difference in the price of this asset for those two scenarios. The market currently works more like the second option, and assuming that it would only reflect the fundamentals of the underlying economy would correspond to the first option. There are a few elements that are considered to be the reasons. The first one is the significant increase of amount of money printed by the central banks around the world, which is then distributed to the banks, with the expectation that they will be loaned to businesses. Normally that's a good thing, but with a lack of opportunities in the real economy, the significant portion of that money actually went back to the financial system to buy up the price of existing assets. Now that the QEs have been wrapping up or ended around the world, I think that this drive behind asset price may no longer be as relevant as it is right now for the future. It is now compensated by the arrival of capital from one region to another, and from one sector to another even within the same jurisdiction. With the increase of tensions around the world, capital is always looking for a safe haven to park their money into, not just for a place to grow the nominal value, but with a currency that tends to keep its purchasing power as well. The third factor is the creation or the birth of artificial bubbles, either maintained by the market trends built up over the years or out of necessity. Capital needs to find a place to stay. Some good examples of this would include the EV sector in the 2020 and the oil and gas securities when there are tensions around the world. Either way, when it comes to the price trends of the market, the degree of uncertainty is a key drive behind the price fluctuations, and that is likely going to increase as we go on from there. When companies announce that they are going to enter or exit different markets, or that they will be trading on different platforms and exchanges, this can all have significant ramifications on the price of this asset. Some of the considerations to have when operating in this context include having a clear view of what is going on, especially regarding the cash flow and the capital flow, and avoid certain potential pitfalls. One of these is to be careful with short positions. Inherently, short positions are riskier than long positions, as the downside of long positions is limited, whereas the short positions can lose you as much money as the stock price may reach, which is infinite. On top of that, we're now seeing a new phenomenon with short squeezes, involving a group of retail traders propping the stock price up, forcing short sellers to recover their positions. Sometimes the attempt will not succeed, but sometimes they end up in very spectacular success. Something else to consider is to treat tech stocks with care. To start, ask questions when the price of a security skyrockets without real fundamentals. It doesn't mean that you shouldn't be touching it with a 10-foot pole, but it does mean that there should be a difference between the decision of long-term holding and short-term trading. Either way, a rule of thumb is that each position should be structured in a way so that their individual performances will never affect the portfolio's stability. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.